Morning, everyone. It's 8:50, and this is Friday morning's pre-opening comment. It is video number 679. And as I always remind you, if you like the work, please hit that subscribe button. Okay, so we have not a whole heck of a lot of news this morning. Asia and Europe followed the U.S. to the downside, and you know, not by much, but in somewhat of a meaningful way. There are several threats of sanctions to Europe, specifically to Germany, since they're the biggest recipient of value on this gas pipeline from Russia south. So Biden, in his effort to follow his president Obama's overreach of the federal government, is making all kinds of noise about that. Also, on the Biden overreach, there was a last minute amendment to his landmark bill for $1.9 trillion that says that states may not use any of the money to make up tax cuts of any kind. So, if your state is not in terrible shape and your tax rates have gone up, which most have, the new bill says the state may give you no relief from that using that money. Also, on CNBC this morning, a very interesting interview with Danny Meyer. He's Gramercy Cafe, founder of Shake Shack, a very bright, very successful restaurant entrepreneur. And somebody asked him the question of where they had to be in order to be profitable. And his answer kind of surprised me because I hadn't really given it that much thought. And it's both a big positive and a big negative. The big positive is that even at 25% capacity, which, by the way, is going up immediately this coming week, with outdoor dining, a lot of his restaurants were break even or possibly even slightly ahead. His point is that it's the spring. Spring is coming, warmer weather is coming, increased capacity inside is coming, and if they factor in the outdoor dining, which makes sense, then they will actually be profitable at lower capacity than was expected. The part of this that got me interested is the fact that while the small restaurants and non-chains get no real help from this in particular, the big ones, which are all up substantially, the Shake Shacks, the Darden, the Cheesecake Factory, all of these bigger ones, I can definitely see where money is going to flow there. But that really doesn't help any of the little guys. Okay, Chubb buys Hartford Financial. Looks like a $23 billion deal, and Hartford is up about 11%. On the earnings front from last night, we had Nike, which was a beat on revenues and a miss on profits. I'm using last night's closing at 4 o'clock, which is pre the news, and I'm doing it for a very specific reason. I'll get to that in a second. So Nike is currently trading around 139. It's down 4 from the 143.17. And it did trade as low as 135. The reason that I mentioned 139 down 4 as opposed to the adjusted prices because of extended hours is because Nike is a Dow stock, and the Dow stocks don't get valued in extended hours. It's full day to full day. So that ought to be a little bit of pressure on the Dow. I also mentioned that for FedEx, which closed 275.86, and which is 275.86 and up $12.49 because it is part of the Dow Jones Transports. So yesterday, while everything else was down hard, the transports were only down $9.78. So I expect that FedEx will be a big positive for the transports. The NFL signed a $100 billion 10-year deal for its games, and Amazon has a separate deal with them. They are the exclusive of the Thursday night football games, but you'll have to be an Amazon Prime member in order to see it. Ford still complaining about the global chip shortage, clearly a major issue for all automobile companies, but it also is up 45 cents this morning on an upgrade to overweight from equal weight at Barclays. DraftKings and MGM. I'm mentioning them because we just started March Madness, and I mention them only because they both have online betting. Both of those stocks have had nice rises. They're near 5-year highs. They're also a little overbought, but as the spring comes around, as it does for the restaurants, it also does for baseball. And I don't know about other facilities, but Fenway is down to or is up to 12% capacity. Tickets are incredibly expensive. For non-opening day games, the first come is the season ticket holders, but there are no tickets under $160, which, I mean, you're talking to a guy who would be happy to sit in the bleachers for $30 or $40. That does not exist. As far as the openings, we have the Dow up about 40, NASDAQ up about 70, and the S&P up about 12. And before you get excited, these are just minor bounces. We were down 153 and 300 off the high in the Dow yesterday, so up 40, especially, is a meaningless bounce. Up 70 in the NASDAQ after being down over 3% or 409 means absolutely nothing. And it looks like the S&P, which was up about $10, is now down on the day. So I'm not looking forward to a particularly good day here. It is a Friday, so there's always the upside of not having to work about anything for 2 days. All right, the chart on the screen is the oil, and as you can see, it tried to rally. It got about 40% off yesterday's low, which was down 7% and change. But after rallying up from yesterday's close right around $60 all the way up to 61.40, up $1.40, we are now making new lows on the day, and we are 59.30, and that's down another 3/4. So have a good day, folks. I wouldn't be trying to catch any knives here. I do kind of like a couple of the bigger names. Cleveland Cliffs looks interesting to me. So does Freeport McMoran and AMD, and the aforementioned DraftKings and MGM. All right, have a good day, folks. I'll be back later.